Hello, doing a portfolio update for January expiration. Uh, S&P is down another 100 points today. I'm down about $900 for the week. Uh, Currently, this is my biggest position. I'm in the money for this put now. This short put for next week. Uh, Overall, I'm not that long. I'm still only at 45 beta weighted delta. So like 100 point up move would get me pretty flat. And then yeah, I'm still sitting on a lot of buying power on the sideline. But probably I'll still look to reduce my delta on any pop. Yeah, Disney went down $10 with Netflix earnings. I don't really have any position on it right now. Just well, I'll have to see how much risk I can reduce on my lawns before I start adding on my Disney. Um, yeah, crude oil, I think we see a top at 87. Yeah, I was short a mini crude oil, and then I got stopped out here. Yeah, I sold it at around here, and then I got stopped out here, and then it started falling. So I sacrificed myself for crude oil to top here. If we get back above 87, I'll short it again. Right now, my biggest position is probably this. I'm using $40,000 in buying power. Um, this will probably go down 10,000 because I have a bunch of puts expiring today. Uh, yeah, I have like over 10 puts expiring today. For next week, I'm short like 18 puts on this level, and I'm short some calls on this level. So hopefully we have a flat week in crude oil next week. And these are against my long puts in April. Yeah, when it fell below 60 today, uh, I sold a bunch of extra calls, these calls, to make sure that I'm not caught long. So what I did was something like this for a tiny debit or credit. Uh, yeah, so I'm short a bunch of 63 and a half and 64 puts. My lowest short put is short call is 62 call. So hopefully that's not breached. Well, even if it is, I can always roll up. What I would do is do this. I would roll up a strike for credit. I mean, if it's brief. If it so 62 was the high this week. 62.2. That's where crude oil was at 87. I'm caught a little bit long. It broke the whole year's um range this week, and I think SPY broke the 200-day moving average. Yeah, it broke the 200-day moving average here. So we could probably see a bounce, hopefully. But if we don't, then we could go a little bit lower. Um, yeah, I don't have too much downside risk. This is my biggest downside risk. This two puts in Yiming S micro Yiming S&P. So this has like about 45,000 in notional value. So 4,400 times $5 a point times 2 contracts, 44,000. So this is my biggest downside risk. I'm not too worried because I'm sitting on a bunch of a lot of buying power. For IWM, I am short the 208 calls for next Monday. So those will expire worthless probably. And then they have their FOMC meeting. That's why these calls are still have a quite high value here at 20 cents. So there's a chance that it could rebound up after Wednesday or Tuesday or Wednesday after the FOMC meeting. Like if they say they're gonna support the economy or whatever. Yeah, but I just showed this call to reduce some delta because I don't want to be caught too long. And then I had a 207 straddle that I rolled down to the 204 straddle. I paid a dollar to do it. So currently this is about, I'm down $100. So I was actually up like $30 here when it rallied, but I didn't take profit because I thought at 208 the 207 straddle would be slightly short, which was good, but then I didn't think it would plunge immediately afterwards. So now I'm caught long, and then I roll down to the 204s. So that's what it looks like. This is only long like 17 delta. There's still 350 in extrinsic value here. So if this goes down to like below a dollar, then I would probably roll it out 3 more days to maybe like see if we keep going down, I would roll this down to something like this, get more extrinsic value. It depends on whether we get a bounce next week. And then this rally I think threw a lot of people off here. The rally this week. Yeah, when it went up here, I sold a 67 put, and then as it kept plunging below to below 70, I realized I was too long. So when it went back up to like to here, I took it off. Yeah, so when it dropped to here, I sold some call spread here at the 80 levels. So I sold these call spreads um, to defend from being too long. And then at when it bounced back to 72, I just because it just didn't look good at all, so I just took off this, and I took this off for loss. Here you see I took this off for 160, and I probably only collected like 40-50 cents, so I took $1 loss here. Yeah, and then as the day went on, it looked like it wouldn't even bounce above 70 for next week. So I put back on this call spread, and then as it kept plunging, so before I had two of this on. Yeah, I had two of these on. So these were about 18 delta long. Yeah, as it kept plunging towards the end of the day, I shifted them down by paying a debit to just 5 strike lower. So I closed this position, and then I did this. To cut my delta in half. So I paid 24 bucks and $27 for that. So that cut my deltas in half. So now I ended up with this, which is still 7 delta long. So hopefully the 60 holds, because that's the lowest Roblox has been since this IPO. And then I think 60 can hold because there's always buyout risk now that Activision has been bought out by Microsoft. So I don't think they would short it all the way below 60. And then we're already what's 68 divided by 134. So we're already 50% off the highs. But at the 60 level would be 55% off the highs. And that's just in 2 months. Well, even if it doesn't hold, I can always I have all this time to roll down. So currently this is for $36 in value, and then I pay minus $464 here. I got $1.34 here, and then tiny change here, and for a total credit of minus $317, and then currently it's for 30 cents, so I'm at $280 loss, which is not that bad considering I was long it from like 98. Yeah, this is the power of trading small and just using diagonals and defending. I'm only down $300 when it dropped like let's see, 68 divided by, yeah, it dropped 30% against me, and I'm only down $300. Well, I'm also done. Yeah, I stopped buying the shares, so I'm also down about $100 here. So I'm down about $400 in Roblox in the last month. Um, yeah, hopefully the 60 level holds because there's $90 to burn off here. So 2 contracts, that's 180. So I could potentially make back 150, $150 next week. Then I still have like another 50 days to make back the other 150. And then since earnings is in between, I can always sell something like this for $150. Also, I'm not too worried because this is like I don't have too many lawns. So this is one of my lawns, and it's only um, and I already rolled down to a 60 level. Yeah, BB didn't look good at all today, even with the spike in GME. Uh, yeah, I was getting worried I was too short, so I sold some 9 puts for this week when I was up here, and then it just plunged. Yeah, and then at the end of the day, I closed some of my 8.5 puts. So I bought. I was short about 9 of this. Let's see. So I was short like 17 of the 8.5 puts, and then Robinhood bought them back for 4 cents each for 68. So 17 contracts times $4, that's $68 that it bought back. So after that, I sold 5 of the 8 puts to get the credit to go against this debit. So this here. So it's like I rolled these out to next week for less contracts. And then yeah, it didn't look good at all towards the end of the day. So I just I bought back 6 of them and sold 9 of these. which is not that great of an idea if it keeps plunging. Let's see. So bought back 6 and so yeah, so this is like a minus 45 delta that reduces my risk. Yeah, I think we could see a new low in BB lower than here. Yeah, we could test $8. Yeah, so I'm short 24 of this and 4 of this. So about 30 puts, I'm short 30 puts. Okay. And I'm using 8,000 in buying power, which is not that much. Yeah, so my 2 longs are BB and Roblox. Okay, so I'm short 30 puts, but then I have 3 of the 7 puts in February. 4 here. 7, 20, 27 puts here. 27, 33 puts. 33 puts. I have 60 puts, so I can sell up to 60 puts. It's not too big of a problem. It would just make me use more buying power. Yeah, I'll see if we stabilize first before I sell any more puts. So hopefully the 8 puts will burn off, and then I just have to roll out the 8.5 puts. And I got assigned. Yet this move caught me off guard, and then I'm now assigned 200 shares of IQ at 4.5. Yeah, I'm assigned 200 shares here. I'll probably sell out the shares and then just replace it with. So what I would do on Monday morning is sell 200 shares that I have and then replace it with the short 4 put. That would cut. So then that should cut my loss to like $20, and then I just sell the full put for 1 more week afterwards to break even. Yeah, because right now it's all about risk reduction, not getting a higher return. So at least not until I can take care of these puts here. Yeah, and then gold, I just have a flat position. EWC, I don't know why it's been really strong for the last 2 weeks, all the way from 27 to 31. And currently I'm down $100 on this, and I'm center at the 29 level. But I don't think the premium is that good here. It's only 28 cents. So even if things go perfectly out, it will still take 2 to 3 weeks to get back to even on this, since I'm down $100. And then PayPal, I've accumulated up to 16 shares now. So I've been buying from up here, and I'm down $500 on just 16 shares. Yeah, I'm still waiting for it to bottom. I don't like to add to losers that much, so I'm just adding a little bit as it drops. Let's see, like 90 shares. Yeah, 140,000 is not that much, but I would wait until the market bottoms first before I add in. Yeah, right now it's just defending, more defending. Yeah, I'm now down $500 for the week, but still up 10,000, 15,000 for the last 3 months. Yeah, cause I was short at the top, but I just didn't keep pressing my shorts. That's why my fade out position is not doing too well. But the thing is, I'm not that long. That's why I didn't press my shorts, because I'm not that long on them. I don't have that much downside risk. Yeah, this is my biggest downside risk. Uh, yeah, hopefully we stabilize next week. There's I think Apple earnings. Yeah, so if the big tech has decent earnings, I think we should stabilize next week. Yeah, so that's why I don't wanna defend this too aggressively. I might sell like the call for $10 here. But then we were just here 2 days ago. So I guess with the Netflix fall, this strike here is probably okay. But I want to do this on a bounce, not in the hole like this. Yeah, cause bear market rallies are very vicious, so wait for the bounce first, and then reduce your delta from there. Yeah, that's all for my portfolio update. Thanks.